All right, let's get more on the Teck Anglo deal. Going to Dalton Baretto, he's Managing Director, Equity Research of Metals and Mining at Canaccord Genuity. Dalton, thanks for joining us today.
Thanks for having me.
So there is an argument that's being made that Teck is giving itself away on the cheap. They could get a premium for shareholders. Do you agree with the argument?
Well, it is marketed as an at the market merger. Although if you do the math based on Anglo American's closing price, it looks like there is a slight premium baked into the actual share exchange ratio, right? But the reality of the situation is Teck's been having a hard time with its QB2 operations. They put out an update last week suggesting that the issues could be sort of more extensive than what the market was expecting. It could impact production over the next couple of years. Obviously, this is the biggest asset in their portfolio, so there will be an impact to cash flow, right? So here's an opportunity to put this asset into a bigger portfolio with a company who owns 44% of the mine next door with obvious synergies. And that was going to be done anyways. I mean, the industrial logic speaks for itself there. So here's an opportunity to put these two together and sort of mitigate some of the impact of, what could be a couple of years at QB2, right? In addition, when you look at the combined entity, right, it's world class. It's going to be the second largest copper dominant portfolio, backstopped by interest in 6 world class copper mines. So the argument is there to put these two companies together. Teck has underperformed this year, so the timing is a little bit surprising. But given some of the issues that they're facing at QB2, some of the logic starts to become a little bit clearer.
Do you think that once they figured out what the problem or how big the problem was, I think it was in Chile for them, that was a bit of a turning point for them?
Absolutely. There was a bit of a mea culpa type press release last week. The chief operating officer departed the company. There was an external advisor brought in to sort of look at this entire thing, soup to nuts, not just address what is the tailings dam issue, but also look at the broader operation and look at where it could be optimized.
Could this deal, you talked about a small premium perhaps when you do the math, but could this deal be scuttled by investors who want more than that?
Yeah, it's very possible. Teck needs a 2/3 majority of both the Class A's and the Class B's. The Class A's, almost 80% of them have been locked up, and almost none of the Class B's have been locked up. So yeah, it's a very real scenario. There's also a scenario that there could be an interloper, right, which would change the pricing dynamics of this deal.
Okay, talk to me a little bit about what each party gains here. You mentioned sort of Chile and an overseer there who could help out with the problems. What else does Anglo, for example, get with Teck? What does Teck get from Anglo?
Well, what Anglo gets Anglo is going through a process of streamlining its own portfolio. They were approached by BHP last year about, acquiring Anglo American. And part of that offer was sort of simplifying the portfolio. So, hiving off the South African platinum business, hiving off the diamonds business, doing something about the coal. But Anglo decided to go at it itself, and it's well on its way. And when you lose large business segments, you want to make that up, and they're going all in on copper. So what they get from this is they bulk up in copper basically. So they add another sort of 500,000 to 600,000 tons of copper to their almost 800,000 ton annual production run rate, which puts them in top 5 globally, but top 2 if you look at purely copper focused companies. They also get sort of a simplified ownership structure for the QB2 Collahuasi joint entity. Right? Anglo owns 44% of Collahuasi. Glencore's got another 44%. The Japanese have the rest. And then Teck's got 60% of QB2. So now the combined entity would have both pieces and could sort of, really push forward on some of these synergies that need to be realized. From a Teck perspective, as I was saying earlier, you put QB2 into a bigger portfolio where you can now really take the time to get this asset right. But then you also are part of this larger world-class portfolio that's copper focused. It's going to be headquartered in Canada. The executives are going to be in Canada. Teck's going to have, it's going to nominate 50% of the board. So It's being part of a much larger player on the global stage.
The HQ, as you mentioned, would be out west, I believe, in Vancouver. But what are the other requirements that would have to be met for Ottawa to sign off? We know Ottawa takes a narrow view of foreign entities partnering, especially in mining in Canada. So do you think this will pass that test?
Well, this isn't Teck's first kick at the can, right? There were the conversations with Glencore twice, but most recently when they sold the coal business to Glencore, and that had to pass Investment Canada review as well. And so I have no doubt, and I think management actually alluded to this on the call, that they would have had significant conversations with Investment Canada ahead of announcing this deal. There's a number of commitments to the country that were outlined in the press release as well as in the presentation. One of those being that the global headquarters will be located in Vancouver, along with most of the C-suite and a significant number of executives. They've also committed to no net job losses. They've committed to $4.5 billion in investment over the next few years. And they've made a number of commitments to Indigenous communities, the townships, as well as the broader Canadian mining ecosystem.
You mentioned interlopers as a possibility. Who do you see perhaps putting up another bid?
Well, I mean, going back into very recent history, you had Glencore bidding for all of Teck, and you had BHP bidding for Anglo American, right? So those would sort of be the obvious names that pop up. Rio Tinto is another big one that's looking to bulk up in copper as well. When I look at the two entities, though, it's not just Teck that's in play now. My view is that Anglo American's in play as well. And in many ways, a bid for Anglo American is almost more likely than a bid for Teck, just because there's less sort of, let's call them frictions, right? You wouldn't have to go through an Investment Canada rigorous review. You wouldn't necessarily need to deal with the dual class share structure. And Anglo ticks a lot of the same boxes that Teck does, but at a bigger scale.
Interesting. All right, Dalton, I have to leave it there. Dalton Baretto, thanks for your time. Dalton's a managing director, equity research, metals and mining at Canaccord Genuity.